If you're trying to reach your first $100,000, but right now it feels slow, frustrating, or even impossible, you're not alone. Most people feel like they're doing everything right. They're working, they're paying bills, maybe saving a little, and somehow they're still stuck in the same place year after year after year. The truth is, it's not that people don't work hard, it's that most people are playing the money game without ever being taught how the game actually works. And when you don't understand the rules, you end up making progress in the wrong direction without even realizing it. Now, in this video, I'm going to show you and walk you through the smartest route to $100,000 in 2026. This isn't theory or hype. This is based on my own personal real experience in building a portfolio, managing money, and doing all that while serving 22 years in the military, raising a family, and investing aggressively to accelerate my own results. Before we get into it, though, I want to say this clearly so there's no confusion with this. I'm not a financial advisor, and this video is not financial advice. Everything I'm sharing is just based on my personal experience, so always do your own research before making any decisions with your own money. All right, now the reason why everybody's here, right? Here's the part that most people miss right from the start. Building your first $100,000 is not just about money. It's about understanding the system that you're operating in and choosing the right path early on. Let's say I want you to think about this like a game, right? Every game has a couple things: rules, obstacles, and strategies that work better than others. If you don't understand those things, you can put in a lot of effort and still lose the game. When it comes to building wealth, there are, I'll say, three main paths people take, but only one of them actually works long term. The first path is the get rich quick route. This is where people chase fast money through like day trading, options, meme stocks, crypto hype cycles, or whatever trend is hot at the moment. It feels exciting, and there's always the possibility of a big win, right? But what most people don't realize is that this path is built on inconsistency. You might win once, maybe even twice, but long term, it's extremely difficult to sustain. Most people end up losing money or giving back whatever they actually gained. I've seen it happen over and over again, and even in my own experience with like Bitcoin and stuff. It's easy to get pulled into the mindset of trying to speed everything up. The second path is what I'll call lifestyle inflation trap. This one is more common than people think, and it's actually more dangerous because it doesn't feel like a mistake, and a lot of people are guilty of it. This is where people earn more money, but their spending increases at the same pace or even faster. Every raise turns into a bigger car payment, a more expensive lifestyle, more subscriptions, and more financial pressure. I've personally seen people making $200,000 a year who still live paycheck to paycheck. Not because they don't earn enough, but because they never built the habit of keeping money or investing their money. The third path, and the one that actually works, is what I'll call the middle path. It's not flashy, it's not exciting, and it surely does not happen overnight, but it's the most reliable way that somebody can build wealth. This path is built on, we'll say, three core actions: increasing your income, controlling your expenses, and investing the difference consistently over time, long periods of time. Now, I know that sounds simple, and that's exactly why people overlook it, because it doesn't promise instant results. But the reality is, this is how the majority of self-made wealth is actually built, and it's boring. Now, before you start building towards 100,000, you need to understand what's working against you, because even if you're doing everything right, these forces can still hold you back. The first one is inflation, and it's high right now. This is something people hear about all the time but don't fully understand. Inflation is what causes the cost of everything to go up over time, which means your money buys less and less each year. If your money is sitting still, it's not neutral, it's losing value. Over time, that loss compounds and it becomes very significant. The second force is high interest debt. This is one of the biggest obstacles to building wealth. Credit cards, personal loans, high interest car payments, high interest mortgage payments. It can trap you in a cycle where you're constantly paying interest instead of making actual progress. If you're paying 20% interest on a credit card, you're essentially working for the bank. That debt is growing faster than your investments ever could. The third force is lifestyle inflation. I've been guilty of this one myself. This is the tendency to increase your spending as your income increases. It feels natural, getting things you feel like you deserve, but it quietly reverses your progress to make more money. And so before you focus on building wealth, you have to control these three forces, right? Otherwise, you'll always feel like you're moving forward, but never actually getting ahead. Now, once you understand the game and what's working against you, it's time to actually build. The smartest route to $100,000 comes down to 3 levels, and each one builds on the previous one. That first level is eliminating all of your high interest debt. If you have debt with interest rates above 6 to 8%, that needs to be number one priority. Get rid of it. This isn't about preference, it's about simple math. No investment you make is going to consistently outperform high interest debt. So every dollar you use to pay that down is essentially a guaranteed return, right? The strategy here is to focus all extra money on your highest interest debt while maintaining minimum payments on everything else. Once that's gone, you simply move on to the next. This step alone can completely change financial trajectory, and it can teach you some valuable lessons along the way. That second level is building your financial foundation. This is where you create stability so that your progress doesn't get wiped out by unexpected events. Now, of course, you need an emergency fund. 3 to 6 months of expenses saved in a place that's easily accessible. This gives you a safety net so that when life happens, which it will, you don't have to go back into debt or sell assets or anything. You also need to understand your spending. Most people don't realize how much money they're losing to small, repeated expenses, subscriptions, impulse purchases, unnecessary upgrades. It all adds up very quickly. Tracking your money gives you awareness, and awareness gives you control over your money. The third level is where things start to accelerate. This is where you go, say, on the offense, right? You're not playing defense anymore. You focus on increasing your income and investing consistently. Increasing your income doesn't mean that you need to overhaul your entire life. It can start with negotiating your salary at work, improving your own skills, or adding a side hustle, which is very, very simple to do. Even a few extra $100 a month, when invested consistently, can significantly speed up your overall timeline. And then there's investing, right? Which is a multiplier that turns effort into real results over time. If you only rely on your income, you'll always be trading time for money. But when you invest, your money starts working independently of your time. The simplest way to start is with index funds like VOO or VTI. You don't need to overcomplicate it. The goal is consistency, not perfection, right? And VOO and VTI generally do very well. Once you start, automation becomes your biggest advantage. Automating your investments removes the emotion. It ensures that you stay consistent regardless of what the market is doing, and you can dollar cost average over the years through the market. Now, here's the part I'll say that changes everything. The first $100,000 is the hardest. It takes the most effort, the most discipline, and the most consistency. But once you reach that point, momentum starts to build, right? Your money becomes large enough to generate meaningful growth on its own without you. That's where and when compounding really starts working in your favor. And that's why your focus should be on reaching that first milestone as efficiently as possible. Not chasing trends, not trying to get rich overnight, because it's not going to happen, but building steadily and consistently. I didn't start early. I had to figure this out later than I honestly should have. But once I understood the system and committed to it, everything started to change. This isn't about being perfect, and you're never going to be perfect. It's about choosing the right path and staying on it long enough to actually see the results of it. If you're serious about reaching $100,000, focus on controlling what's working against you. Build your foundation and stay consistent with your investments. Also, if you want to follow my own journey as I build towards $1 million, because I'm doing this with you guys, I'm sharing my real numbers, my real strategies, and real progress. Make sure you guys subscribe to the channel. I'm documenting everything in real time, and I'll see you guys in the next video.